I will walk us through a very simplified step-by-step version of how we trade, okay? But first things first, there's a little bit of celebrating to do. Look at all these green trades. You guys, this is amazing. When I opened up my demo account today, I was like, heck yes. I was like, I cannot wait to get on this call and celebrate with all of my friends. It's going so well this week. Let's just keep on holding on to those trades and stay positive. All right. So over on the right-hand side of my chart, if you haven't been through the starter course yet, please make sure you guys go do that right after this call or whenever you have an opportunity to this week. It is going to give you a step-by-step of how to trade, how to get your symbols on your chart, what our entries mean, but I'm going to walk you through a brief version of that. And we're going to kind of go through the symbols that we're currently in and talk about the trades that we're currently in, because I think it's really important to kind of recap. Most of these were trades from, I believe, the Sunday broadcast that we got into. This is the only one that's sitting in the negative, and I am also in my futures symbol of the Australian dollar sitting literally at break even. I don't know what she's going to do. She is just kind of hanging out there, not really doing much of anything. So let's hope that it wants to push up. We'll see what happens. So I do use our indicator to trade. Okay, so you can get that from the Skool community as well. It is in a pinned post there, so you can grab our indicator, and it's just easy, right? We just keep it so simple here. Our motto here is it gets to be easy and fun, and we've never strayed from that. It's always been easy, it's always been fun, and it's always getting more easy and more fun. So that's odd USD. We're currently in profit on Euro odd. So these are all of my foreign exchange symbols to the right. As you guys know, you can trade both Forex, you can trade futures, you can even use our system to trade stocks. I have never personally traded stocks, but I have looked at them with our indicator and it always looks beautiful. We're also in profit right now in Euro CHF. So it's the Euro versus the Swiss franc. And so what we do is we use this little gold line called the EMA, okay? And I was thinking about it today, and how we developed this system was by understanding trends, understanding how to identify in a very simple way which direction the market's moving. A lot of people like to use support and resistance zones. A lot of people like to use supply and demand zones. There's no shortage of ways to identify the structure in the market. But our EMA is very special. It kind of acts as a dynamic trend line, if you will, right? So I don't know if any of you guys know what a trend line is, but it's essentially a little diagonal line that you can use to draw from the top point of one trend down to the bottom of the trend. And a lot of people like to take trades when the market kind of breaks above a trend line or bounces off of it. And so our EMA is really cool in helping us identify the current trend, right? So if our candles are below the EMA, we know we're trending down, okay? If our candles are above our EMA, we know we're trending up. It's dynamic. It shifts with the market. So as the market is shifting directions, the EMA will also shift directions, okay? So this is how we find whether we're taking buy or sell opportunities. And the way I see the market is kind of like a river of money flowing in a certain direction. It's either flowing up or it's flowing down or it's just moving completely sideways, okay? And our goal is to float in the river where the money is going. That's our goal, okay? We want to be floating with the big banks and institutions. We don't want to predict where the banks and institutions are buying and selling. We just wait for them to buy or sell, and then we jump in the market with them and then hope the market continues in the direction that it was already going. I always say an object in motion tends to stay in motion. So if the market is massively buying, the chances of it continuing to buy are very high until it reaches a premium price. If the market is selling, the chances of it continuing to sell are very high until it reaches the lowest premium price for the big banks and institutions to buy at, okay? So our goal is not to predict where that ending is or to jump in right when that new trend starts. Our goal is to wait for the market to shift above our EMA or below the EMA and then jump into that river with it, okay? And so the way we do that is by using this EMA. I'm going to draw a little fake EMA here, okay? And when the market shifts below the EMA, we're now starting to think there are sellers in the market. The big banks and institutions are now selling with the market, but we're not taking sells the second the market breaks below the EMA. We're waiting for the market to pull back like this into the EMA and not break above it, but to simply bounce off of it. And that little bounce, you can call it a retracement. You can call it a retest of the EMA. It's testing this level and then continuing to push down. In a beautiful trend, we have lower highs, we have lower lows in a beautiful downtrend. So every time the market pulls back and bounces off our EMA, that's where we're taking those A plus entry opportunities. Okay. Now, when we're taking these A plus entry opportunities, the shape of the candle is very important. The shape of the candle will tell you a story of who is in control. Okay. So let's use this for an example. Here, the market broke up above our EMA. We're not taking buy opportunities until we get this retest bounce off the EMA, and then we know it's going to continue to move up. But the shape of the candle is what's important. And this is where we get these buy and sell alerts. You will only get a buy or a sell alert if in a buy opportunity, the longer wick, okay, so this little line on the bottom of this blue candle here, if it's longer than the rest of the candle, than the top part of the wick. You'll also only get a buy signal if the wick actually taps or touches the EMA. And when that happens, you are going to be looking for potential buy opportunities. Now, with our system, we do not place trades the second we see that buy alert come up. We have to wait for this candle to close, because what's happening throughout this whole 24-hour period, okay, because we're on the daily time frame, so there's 24 hours worth of data in this one candle. We're watching it all day long go up and down while the buyers and sellers are fighting over whether the market's going to continue to buy or if it's going to push back down and continue to sell. So this is constantly moving all day, up and down, up and down. But when this candle closes, we know who took control that day based off of the size and shape of this candle. And when we have this longer wick on the bottom and it closes longer than this wick on top, you see how this little wick down here is slightly longer than this one up here? We know that the buyers actually took control. Price stayed consistently above our EMA. Okay, it didn't break down below it. It just simply tapped it, retested this dynamic trend line, which is our gold EMA, and then showed us that the buyers are in control. So that is where this buy alert will then trigger. And when before the new day starts, is when you set your buy or sell stop opportunity. The color of the candle does not matter. If this candle here was touching the EMA, this would also be a potential entry opportunity. You didn't get an alert here because this wick didn't actually come down and tap the EMA, but this one did. So this candle here was your entry opportunity. Let's go look at a sell position quickly. So here we have, this is where the market shifted from buyers in control. It shifted down below our EMA. Okay, now we know we're looking for sell opportunities because now all the candles are below my EMA. So we're starting to get these pullbacks into our EMA. And here you can see this red candle right here was our sell alert. We got one on this one as well, but there is one very special rule with our system. And the system is if you set a sell position on this candle here when this market closed and you don't get entered into it the next day, then you're going to delete that order and reset on the new sell alert position. So when you're looking for a sell position now, this is where you're going to place your little short position tool on the very bottom wick here. Stop loss goes at the very top wick, and you can set a 1.5 or whatever risk to reward take profit you want to set. Now, this one here, if we look at this blue one, if I set my sell stop here, this is my entry. If this candle did not cross over my entry this next day when it was done populating, then I would delete that order and then we reset on this one here. I know this can be a lot when you're first starting to learn, but don't give up. Just keep following along. It can be a lot at first, but you're going to catch on, I promise, okay? Now, we set our entry at the very bottom wick. Stop loss at the top. When we're looking for sell position, we're looking for that rejection or bounce off of our gold line. But this time, if you're looking for an A plus sell candle, that longer wick has to be on top. And now you have a shorter wick on the bottom, because what you're seeing here in this story of this candle is that buyers tried to come in and push price back up above the EMA, but then sellers came in and pushed price back down again, leaving behind this wick, showing us that the sellers became in control, which to us signals now we're going to continue to sell. sell in that same little down pattern where it's creating lower highs, okay, and lower lows. So this is a healthy sell pattern. So we've got a high, a lower high, a lower low, a lower high, and even lower low. Somebody asked, does this work on the 4-hour time frame? Absolutely. This strategy works on every time frame. The only rule is, as always, you have to wait for the alert candle to fully close and see the new candle populating before you can set this position. You have to confirm that it does stay an A+ candle. That's the only stipulation. So then we had the market break back above this EMA. This candle closed above the EMA. We got our retest bounce. The market stayed above our EMA. This is now our new entry. We got entered into this. We hit take profit. The market pulled back in again, created a higher low, gave us another A+ bounce retest of our EMA, and then we hit another take profit. Okay, so this is a very healthy, clean retest pattern, a buy pattern. And then the market did it again. So we did have a little bit of a breakdown below our EMA. We didn't get any retest sell candles because the market broke right back up above the EMA. So buyers took back control. We had our bounce retest, set our 1.5 risk to reward, and hit another TP. Once we hit this take profit, we're just looking for more buy alerts. Once we're above the EMA, we know we're only looking for buy positions. When we're back down below the EMA, we're now thinking sell positions. It's as simple as that. So now that the market gave us another bounce buy, bounce buy, bounce buy, this is the one that finally entered us into this position. And now we're just waiting for the market to continue to populate and hit our take profit. All right, what I'm gonna do is click through all my symbols and I'm simply looking for my buy or sell tag because the market is closed right now for 1 hour. You do see a candle populating, but we're looking at today, Tuesday's closed candle, okay? So we're gonna be looking for a buy or sell tag on today's closed candle on Tuesday. So let's click through real quickly. So remember, we're looking at today's closed candle on Tuesday. Oh my gosh, everything's above the EMA. So when price is floating up above our EMA, there's really no entries to set, right? We've left the runway. Price is hanging out. It's trending. It's doing its thing. We cannot set trades until it comes back to our EMA. Whew, such a beautiful trade. Look at this trend, you guys. Look at this bounce, bounce. So nice. Okay, there are no new entries to set today. Boo! Let me go ahead and go to Shay's question. She said, can you go over trade management? I find that I move to break even too soon and get stopped out. That is definitely one of the biggest bummers of moving to break even. I've really been talking a lot about moving to break even and protecting your capital lately, just because of all the conflict that's going on in the world. Obviously, trading is a very risky game in itself, but when you have a lot of truth socials coming out and a lot of news, there's a lot of news right now happening with Iran and all of those things. I've really been harping on protecting your capital and moving to break even. Unfortunately, there's no hard, fast rule on when to move to break even. And sometimes you're going to get taken out of a position that otherwise would have continued to move to your take profit. So you really need to think internally. This is a really internal reflection that you need to have with yourself is, does it feel worse to you to move to break even and get stopped out of a potential winning trade? Or does it feel worse to you to not move to break even and lose your capital? And you really have to sit and journal about that. You really have to sit and discuss with yourself, am I okay on missing out on profits to protect what could have been a potential loss? Because if the market is pulling all the way back to your entry, chances are you're either going to get a new entry or it's going to come and stop you out. There are very few circumstances where the market comes so far back, like this one here. This was actually a really good example because I did say the market had gone, let's see, which one was it actually? Was it GBP USD? I don't remember actually. It was one of these. This one looks like it hit TP pretty fast. Might have been a different one. It didn't quite make it to our take profit. It was almost there. And the next candle just dropped massively down. And I said, look, if it doesn't want to make it all the way to your take profit, it's better to move to break even at this point and accept a break even trade than to potentially almost be to take profit and then completely lose this position. That's a really difficult thing for me personally. I would rather protect the capital I have than potentially just miss out on a potential win, right? Because I always know in the back of my mind, there are always new positions coming available almost every single day. Like today's a rare case where or we don't have any new positions, you're going to have at least 1 to 2 new positions every single month on every single symbol. That is plenty of opportunities to profit and plenty of opportunities for you to get stopped out at break even and potentially protect capital when the market turns around. So again, it's managing your trades is I think that's probably one of the main reasons why some traders fail is because of FOMO, right? So we have this fear of missing out, which I always say creates ROMO, the reality of missing out. We're always thinking, if I would have done this, then this would have happened. If I would have done this, then this would have happened. But in reality, you don't know. Nobody ever knows. That's the hardest part of trading is you don't know what's going to happen next. All you know is what's right in front of you. And if right in front of you, the market didn't quite make it to your TP and all of a sudden it's dropping drastically, in my mind, I'd rather not take a loss. I'd rather get stopped at break even and wait for a new entry. And again, yes, Gemma said break even is not a loss and it shouldn't feel like it is. Missing out on profits that weren't even yours yet is not the same thing as actually losing capital that is yours. Those are two very different things. Okay, perfect. Hopefully that helped you. I wish it was a more black and white answer of when it gets to this point, move to break even, but it doesn't matter. Really, it doesn't matter. The market is going to move however the market wants to move. We don't have control over it. The only thing we can control is protecting our capital. That is very controllable in some circumstances, especially if you're in profit on a trade and it starts to turn around. It's like, if it doesn't want to go, it doesn't want to go. Okay, awesome.